about what, 24,750. We have Pathik Gandotra joining us, partner of Dron Capital Advisors. Pathik, good afternoon. Good to have you back on the program. You know that Bollywood dialogue which you usually use, right? Topi Sambhalo. Is it Topi Sambhalo time or is this temporary?
No, it's just that you just gotta stay put and wait. Gari Bangalore to group ke jayegi.
So what is going on? What's the primary driver for this weakness, in your opinion?
I think the earnings season was expected to be lackluster, I guess, and I guess it has been proved to be that. There are other factors like the China weightage going up, which has led to FI selling, and all those factors which are impacting the larger caps. And among the mid caps, I guess the valuations have become a bit stretched. So there's a time for a pause. I mean, it's not as though the rally can continue unfettered, given the fact that a lot of the earnings growth has been very spectacular on the mid cap space in the past 2-3 years. So I guess the market is just taking a pause till the earnings catch up. All the earnings in every sector may not be the same. I think it's time to now pick. It'll be a more difficult to make returns from here on. And so bottom-up investing, I guess, should do well if you're invested in long-term growth stories. So we remain pretty much invested. We've taken some chips off the table, but largely we are invested.
So where have you booked profits? And if you could give some indication of the bottom-up ideas, even if you can't name the stocks, but tell us the themes. What is the driving force behind, liking the individual stocks? What's the trend?
So I'm saying we book profits across the board in stocks which have become a bit overvalued for some time. But I mean those are just tactical profit bookings. The correction will buy back again. I mean we are invested in a whole host of ideas in the EMS space, in the building material space, in garment exports, these are a few of our big themes. We've not yet taken up a big position in IT, but we might look at some smaller companies as we get more clarity on earnings. The earnings is, for example, in the IT space are clearly showing that they have bottomed out and they've stabilized. Now from here on, I guess there will be something which will do well. Sorry. So.
Yeah, Pathik, please go ahead.
Can you hear me?
Yes, we can hear you. IT earnings have bottomed out, so you know that sector could look up. Please go ahead.
Yeah, so that sector will, I think, look up. So we look for good bottom-up ideas in that space as well. So that's one of our big themes which we are looking at. Next is also the real estate sector has done extremely well for the past 2 years. So building material space is also a place where you might get some ideas. But the point is, everywhere valuations are stretched. Earnings have yet not come in all these spaces. Valuations are stretched. So I think the sideways correction might actually be a very good idea. I mean, it might just help bottom-up investors like us.
Indeed. Hi, Pathik. Good afternoon. Nigel on this side. So we're having a bit of a subdued Q2 earnings. But would you be optimistic that we see a recovery in the second half of the year, and then for the year we do pretty okay on the earnings parameter, because that's the one that will drive the markets ultimately?
Yeah, I guess so. I think earnings should revive across the board in the second half. I think in the first half, the first quarter got a bit washed out because of the elections in a lot of sectors, and companies are still recovering, getting the distribution in place. So I think they're still recovering from that, the aftermath of that. But I guess the budget and the fact that there's a stable government and the government is spending aggressively will work through earnings in the next 18 to 24 months. So I think our outlook for earnings is pretty strong. It's just that valuations have gone a bit ahead in most sectors, but earnings should actually revive. So, for example, like we are saying in the IT space, earnings will revive. I think we'll do better as in successive quarters. Actually, all export-facing sectors, because if you see, the US economy is holding on pretty okay. It's not really gone through a deep recession, despite the huge interest rate hikes and the liquidity tightening that the Fed has done. The economy has held up pretty well, and now the Fed is back to cutting rates because inflation has fallen. So I think the impact of both falling interest rates and a stable economy, it's a kind of a Goldilocks scenario that's happening there. And so if that works through, then you might have export-facing sectors doing extremely well, which is where our theme of technology and textile exports and any other sector, which is big on exports, I think we'll do pretty well.
I think Gokuldas exports has been a big bet for you for a while, garment exports when you're talking about. Pathik, although I'll just tell you, there was a note from Bernstein and it was interesting. They said, well, the thesis basically was when you're coming off a pretty euphoric phase, looking at consensus earnings forecasts is of limited use because, you know, you're not able to correctly predict what earnings will be 15% or could actually slow down to 10% because you're coming off this strong momentum in a very euphoric phase. That was their contention. And increasingly at the margin, one is starting to, many are quoting a lot of the high frequency publicly available data and saying maybe there's a bit of a cyclical slowdown, which is underway. I was mentioning earlier Nomura, Morgan, I think I quoted Bernstein earlier. Do you think perhaps we are in one, a slightly softish patch?
I think you are coming towards the end of it because the data has been soft for 6 to 8 months already, if you see, based on the elections and all that, as I've just said some time back. I think, you know, as the government spending continues, if again revives, I mean, it's also taken a bit of a hit. So once it revives, I think the cyclical slowdown will be very, very short-lived. Also, the fact that interest rate cuts around the corner and then they'll work their way through. So I don't know whether it'll take 1 quarter, 2 quarters, but I think you are you are past the hump. So I think from here on, things should look up. I mean, you might have a very good festive season, is what we expect. The rains have been, the monsoon has been pretty decent. And that will also work through farm income. There's also the fact that the government has done pretty lot of schemes, I mean, across the board to boost rural income. So I think if you look at all that, the income part of is getting stronger. And so I think, you know, earnings should logically revive.
I just one more thing, and this is slightly stock specific, but I just want your thinking, not whether you're buying or selling. So Sula is something that you liked at one point, right? Now, alcoholic beverages are doing well. And the case for Sula has been, I think, it's well known, wine penetration and, you know, very low levels, and eventually it should, the stock's not performed at all. I just wanted your thinking around this. Is it a matter of time, or you think there's something amiss?
So I wouldn't like to comment too much on company, but since you're asking, the point is, I think there the growth has been a tad slower than what was expected. I think the management might be needing a bit more aggression on expanding their distribution because it's a very good franchise. It's amongst the dominant franchises in wines today. The big theme of wine consumption in India is secular. So I don't think that theme changes. So I think it just requires a bit more aggression to the management to, you know, increase distribution rapidly. I guess that's where the problem might be. That's why the growth is not as strong as one would have thought. Otherwise, if you see, all the building blocks of growth are in place. So I think an aggressive distribution strategy might do them well.
You spoke about IT earnings acceleration, and that's a theme that you would look at. Now, in IT, what would you prefer? Would you prefer the large caps? Would you prefer large caps where there is earnings comfort or some management change? Mid caps with the BFSI exposure, or these auto R&D companies? You know, where does your preference lie when it comes to IT?
So I'm saying that I'm not sure what space we'll eventually look at. I'm saying that there'll be a broad-based acceleration in IT earnings, and we look for our spaces. We look for stocks which are beaten down where there's strong earnings growth potential. So I really don't have an answer to that question. What specific sector portion of that space will I look at? But you know, normally we look at young companies, we look at new companies. I mean, that's where our alpha comes from. And so we would look at spaces like that. They might be a bit expensive, but you know, that's the space which we prefer. We prefer companies with very, very strong growth rates. So what's happening is that, you know, a company with a very strong growth rate may not have got the multiple that it deserves because of the overall IT suppression in multiples and earnings. So once we can bet on that and across the board expansion, earnings and multiples for IT, and so some strong growth story might come our way. I don't have a direct answer to your question.
All right.
No, you don't have a company in mind, or you don't want? I mean, just
no.
You don't have that.
Actually, I don't have a company in mind. I'm saying that's a space. The question
is a space to look into.
Yes. The question you put to me was where will you look into for new ideas? So I said I'll look into the IT space for new ideas.
All right, the sector of the day, Pratik, today has the two-wheeler space. Bajaj Auto's numbers, it missed what the street was working with. The commentary the street didn't like too much. And the problem is that valuation-wise, it's trading at a big premium in comparison to its 5-year average. What do you make of the two-wheeler players? Anything looks exciting enough for you out there, or do you think it's run its course?
I think two-wheeler space is going through some sort of a disruption, right? Because of the EV boom. Ola is coming through. It's taken huge market share. And so at least on the top line, that obviously has an impact on all the two-wheeler players. I think that's the story which is playing through. So I think the company, I think that's what is the big reason behind, maybe one of the big reasons behind the earnings, behind the top line miss in Bajaj Auto. And obviously stocks have gone up. Across the board, everything has gone up. There's just too much of liquid in the market. There is still too much of liquid in the markets. So if you recall, 6 months back, the thing was mid caps have done well, large caps should do well. When we spoke last time, the Nifty was at its all-time high, and you told me that. It was your birthday, I guess.
That's correct.
Yeah. So at that time, it was just FI flows were coming through. And so that was, it was faceless money, and that was driving every stock up. So I think that must have been the reason for every stock to get minor related because of liquidity. I think earnings differentiation will happen. So the point I'm trying to make is that one has to look through a bottom-up kind of strategy and see which of the stocks has strong earnings. Nigel, we don't focus on large companies at all. Our space is a mid-cap space, so I'm less concerned about large companies.
All right, Pathik, we'll leave it there. Thank you for joining us. Have a good one. Appreciate your time here on CNBC-TV18. Thank you. All right,
Well, thanks so much for tuning in to CNBC-TV18. Make sure you follow us and stay updated on all our social media platforms.